Today, Nasdaq melted right after the release of inflation data. And even though I knew Nasdaq was gonna drop today, every entry that I could see just felt a little too risky for me. In this video, I'm gonna break down the reasons behind my analysis and why I thought Nasdaq was going to drop today. So hopefully you can take some of these lessons and apply it to your own strategies. And to do that, first I'm gonna show you my 4-part framework that I use when trading any piece of economic data. Then we'll apply that formula to the inflation data that was released today, and I'll show you how I use it to analyze Nasdaq. And finally, I'll take you inside my head where we're gonna break down Nasdaq's price action. I'll go candle by candle and I'll share what my analysis was or my thought process when looking for a high probability entry. And at the end of that, I'll show you the actual trades that I did take, which you can see I ended my day with about $2,960 in profit with just a few scalps. Let's start off with that in some context so you know what we were preparing for the day. Today we had a piece of data being released called PCE, which just measures inflation. And yesterday we had the Federal Reserve's interest rate decision. And just in case you aren't caught up with what the Federal Reserve said yesterday at the interest rate decision, let me catch you up real quick, because a big reason on why I was expecting Nasdaq to drop today has to do with what happened yesterday. After the rate decision, Jerome Powell, the chair of the Federal Reserve, does a live Q&A where he just answers questions to the media. During this interview, Powell said a few things that stood out to me. You see, in the last meeting, Powell came off as much more uncertain on what impact the tariffs would have on inflation.
What we're waiting for to reduce rates is to understand what will happen with really the tariff inflation.
But during this interview, not only did he say that he's concerned about inflation, he also said that they're actually starting to see signs of tariffs already impacting inflation. And he says that they're expecting more inflation to come.
It's starting to show up in consumer prices, as you know, in the June report. We expect to see more of that.
The reason this is important is because the markets are currently expecting 2 rate cuts this year. But if the Federal Reserve continues to see that tariffs are impacting inflation, then the markets will most likely stop expecting those 2 interest rate cuts. The Feds won't want to cut interest rates if inflation is increasing, because this would only increase inflation faster. So I want to know what the Fed is looking at to make their decisions on interest rates. They said 2 things. They said inflation and...
The main number you have to look at now is the unemployment rate.
Unemployment rate comes out tomorrow with NFP, so that'll be important too. And I'll also be trading that live with my traders, so you can expect a breakdown for NFP after it comes out. But now, going into today, when we have inflation data coming out in 30 minutes, I have a better understanding of what the Federal Reserve is looking at in terms of their outlook on inflation. That's important if I'm trading something like Nasdaq or gold. And here's how we can use this information to actually plan for this drop before it even happens. My 4-step process for trading economic data is this: expectations, surprise, bigger picture, and then entry. So let's take this and apply this to the inflation data that was coming out. I'm a very visual person, so I like to create cheat sheets. This is one that I made for the Traders in Day Trading University for this analysis. If we can zoom in on this, you can see the date and the time that this was actually put on my PC for the file, 30 minutes before the data even came out. Just so you can see that I didn't try creating this file after the fact. You can trust that this analysis was actually something that I had planned for ahead of time and called it live with everybody. So this is the cheat sheet right here, and I'll just break this down the same way that I would do if I was on the live call. So hopefully this is going to be helpful for you guys. Now, we had jobless claims and PCE data coming out at the same time. PCE data is more important because it's inflation, and I'm not going to go too much into labor market right now, but for this, PCE was a thing that I wanted to be paying attention to primarily. And for this little cheat sheet, you can see this is what I was looking for if it comes out above expected, right? So you can see number 1 is expectations. Now, I don't have the number here, but if you look at my calendar, and it's not on the cheat sheet, we can see for here it says Reuters poll. For you, if you're using like a free calendar like Forex Factory, it would say something like forecast. But it's just the market expectations. So what I was looking for, if this came out above expected, I'm looking for equities, which is Nasdaq, US 30, SP 500, to drop. Now, the reason I'd be expecting the PCE data to drop is, like I was saying before, this shows us that we have sticky inflation. Maybe if the markets start pricing out the interest rate cuts that they're expecting later, this once again could be bad for gold, it could be bad for Nasdaq. So let's break down on the charts minute by minute what actually happened after the data came out. I'm going to cover the trade that I missed, the trade that I took, as well as the second trade that I took. Now, if we pull the economic calendar over before the data came out, well, this is actually the data that was released. PCE data came out above expected. Okay, so I'll push this off to the side. Remember, I was thinking that if PCE data comes out above expected, I want to see NAS drop. Even though I'm still long-term bullish on NAS, meaning long-term I'm still looking for buys, based on this print, I want to see if NAS drops. So we take a look over at the reactions that NAS actually gave us. Here's the first candle here. We just got a whip in both directions. Now, I didn't want to take the sells here because I was actually watching gold to see if it would push to the upside. This one, I'm happy I stayed away because we never ended up getting any breaks of support here, and Nas just ended up consolidating for a while. And we just got really choppy kind of price action. I'll back this up a little because there was one entry here. I started to see volume coming in. And here's the thing is, I'm not gonna take sells on Nas because of the data when the data didn't cause Nas to drop. Does that make sense? So I saw a second entry. This is what I meant when I said the entries that I saw were too risky to me. So this is the first one right here. I'll put a little green and red box on it so you guys can see what I'm looking at here. That break of support, it came up here, rejected. I'm looking for sells on Nas. This is the first nice closure that I can see. But like I was saying, the data came out 40 minutes, 45 minutes after the data passed. Also, if you look down at the time, I know it's a little hard to see, but it's 9:15 in the morning. We're only 10 minutes away from the stock exchange to open, and I don't really want to take this. But if we play out Nas a little bit, I did still say this was a good entry. There were even traders who were taking on the live call the next two candles right down to support. Now, this was the other risky entry. My problem with this one, even though I wanted to see Nas drop, we got a beautiful closure. This is where I wanted to see the support break. For me, maybe I'm too conservative here, but this is, even though I was calling it and I wanted to see it drop, to take something here at the stock exchange open, it's just not something that I want to do because it just opens up my risk. And also, this was just way too fast. I'm happy I was right. I'm happy that other traders that were on the call were, willing to take the riskier entry up here or even down here, because this was a massive drop. I even have a few screenshots actually from the Zoom call. We have this one right here. I hit my stop at $5,000. Appreciate you always, Josh. Whenever I stick to my plan, I win big. But like I was saying, I'm actually short-term bearish on Nas with this data, long-term bullish. So I was actually still looking to see, even though I missed these sells, can I take buys? And I actually ended up getting an entry here. It was just a scalp. Now, one of the reasons that I took this reversal impulsively was because we were actually getting headlines. You can see the time, 9:52 a.m. And if I come here, look at the time, 9:50. It was the exact same time that we were seeing these headlines come out, and then I was sharing them inside Day Trading University's group. And then you can see the trade that I had posted right here. And I even said that I got out already at this zone because it was just a scalp. So it's a little annoying that when I stick to my rules, even though the trade, my bias, and the entry was all there, but I have these rules for a reason, like timing. I'm not gonna be entering a trade 10 minutes before the stock exchange opens, or I'm not gonna be doing something impulsively if my risk to reward kind of turns to shit. Yes, maybe once in a while, I will miss a trade like this because I'm sticking to my rules. But what's the alternative? Because if I just start ignoring this rule that I have, I'll start losing 9 times because I'm taking a bunch of risky entries just to get this one risky trade that finally plays out. And to me, this is not a trade-off that I'm willing to take because I'm looking to stay in the game long-term and I'm not trying to get sucked into risky trades every single time I just see volume.